If you're struggling to become a consistently profitable trader, then in this video, I will share with you my 3-step SMC trading strategy from start to finish. Okay, so let's dive straight in. Easy to understand 3-step system, ICI. Step one. Step one is our first phase of impulse. Impulse is what we use to understand the directional bias of market structure. This, simply put, identifies where price is coming from and where price is heading to. So what we want to see is on the 15-minute time frame, right? So on the higher time frame, for us, the higher time frame is going to be referenced as the 15-minute time frame. We're going to want to see bullish price action with a break of structure of recent. That is the impulse. The impulse of step one is the market structure leg, the price leg that has just broken structure, break of structure. So step one, impulse. Step two, correction. Simply put, after every impulse, there is a correction. The correction looks on the lower time frame, something along the lines of this, right? Price is putting in lower lows, lower highs, and lower lows as price pulls back. So for example, our lower time frame is going to be our 1 minute. So we get impulse, break of structure on the 15-minute time frame. Step two, correction, and we're going to be looking at that correction and perceiving that correction on the lower time frame. And then step three is the second phase impulse. Again, higher time frame, M15. So all we're doing is we're trading the M15 structure, right? But we're dropping down to a lower time frame when price enters a higher time frame area of demand and gives us our entry model, and our entry model is a lower time frame shift from bearish to bullish. It's very, very simple to understand, and I'm going to give you a live example of this system from the trade that I took on Thursday during London session, so London Open. I'll walk you through that right now. So this is it, and what I'm going to do is I'm going to actually bring price back all the way to before the trade had occurred and show you essentially what is in my mind as I do approach the session, right? So we'll pull back to here. Okay, so let's begin on the 15-minute time frame. Now, without overcomplicating this, right? Essentially, let's begin on the 15-minute time frame. Let's remove all of the drawings and let's walk through step by step exactly how I was looking at the market at this time. So we'll come back to here. So here we are on the 15-minute time frame. Now, important to understand is, of course, where have we come from a higher time frame? What does the 4-hour time frame look like? The 4-hour time frame looks like this. Essentially, you can very clearly see we've had a break of structure to the upside, pull back, break of structure again, pull back, and then another break of structure. After this break of structure, which was induced by fundamental news, we've come into a higher time frame area of supply, which we can expect a reaction. We're midweek, so more than likely a high of the week has already been formed. We have so much imbalance, right? A large fair value gap to come and fill. So the overall understanding at this point was bearish, at least when we were up inside the highs. So we drop into the 15-minute time frame. What we want to do is map out our market structure. We need to map out our swing points, right? And for those of you who know my market structure swing points, you will know what this means. So essentially, we had run on liquidity. So that's our high, that's our low. We come up and we actually have, that's not a pullback, but this is a pullback. And for those of you who don't understand why that is a pullback, I'll give you a free in-depth course on how we exactly read market structure. It's 9 modules long, so stick around and I'll tell you how you can eventually claim that. But essentially, this was our final break of structure. This was our shift, our break of structure to the upside, and then followed by a change of character. So a change of character is simply just the shift from bullish to bearish or from bearish to bullish. We just characterize it as change of character because it's essentially just a shift in one direction to the other. From there, we're just looking at the area of supply that caused that shift was here. Price shifted, pulled back up, mitigated whatever it needs to mitigate, went and continued and did a new lower low, break of structure. Price put in this low in here. Now, many of you would be quite surprised to know that this isn't actually a structural pullback. It doesn't meet the specific trade criteria, the rule criteria that we have. but it doesn't really matter in this specific scenario. So this ends up being our lower low. Price has its criteria for a pullback. Again, lower high, and then we go lower low. So we have a new break of structure. So just as we expected, the week is heavily bearish. I was trying to catch this sell-off move in here, but unfortunately there was no entry for me to get into, nothing that actually fit my criteria. But nonetheless, essentially price had just continued moving to the downside. We had another break of structure. This was our lower low. We had our pullback criteria, and then we went lower low again, right? And so we had another break of structure heading into the London session for Thursday. So what I was originally looking at was, of course, I was looking to short. I wanted to short out of this area in here. I wanted to continue playing the lower lows all the way into this imbalance down here. But that didn't happen. Essentially, we had this shift in market structure coming into Thursday. We had run the highs with a close, with aggression, giving us a change of character. So at that point in time, I can only trade the M15 trend, right? I can only trade with the M15 trend, period. And so the only thing that I could look at during this session was longs. And so you can see that this is our swing low. And then this right here is our swing high. And ultimately, so we can map this out as swing high. M15 swing high. We can map this out down here as our M15 swing low. M15 swing low. Now what I want you to do is characterize this move here, right? From this to here. That right there is phase one. That is impulse one. That's our impulse, right? So what we're looking for is, of course, we have to have an area of interest. So we map out our demand zone right here that has a fair value gap inside of it. So we have our demand zone. So we have our impulse. Now we need phase two. Phase two is the correction. That is the pullback into this area of price. So as we drop down to the 1 minute time frame, I need to identify the market structure. So at this present moment in time, what I'll do is put this in green. The 1 minute time frame had higher high, higher low, and higher high. So the 1 minute time frame was bullish, and then it shifted bearish. This shift in market structure in the 1 minute time frame, our lower time frame, tells us before it even occurs, this tells us that the M15, our higher time frame, is now coming for a pullback. So now we've entered phase two, which is the correction. So we end up putting in a lower low, we have a pullback, then we come and put in a new low, but unfortunately we do not break structure to the downside. For me, again, my rules for market structure are very clear. They are repeatable, systematic, and mechanical. I need to see a break below that low and close, not just a wick. A wick to me is a clear indication of a liquidation. So when I see a run on liquidity, I expect a run on the highs. So we got the run on the highs. This is nothing structural. Ultimately, all we were actually coming to do was coming in here to mitigate this area of supply. And yeah, that's really it. So at the moment we're bearish. We have our swing high and our swing low. And again, what time are we now? So we are 12:10. So yeah, this is essentially heading toward now New York Open. I trade from 8 a.m. London, typically to around 12, but I had caught no position the entire week. And after I seen the shift to the upside, the change of character, I wanted to see how price was developed. So as I continued to watch price develop, right, coming toward the end of my session, I decided to stick around and see essentially what would occur. We had this aggressive sell-off in here at New York pre, and that gave us what? A break of structure. So now again, we're just printing off the structure. So I just wanted to see a run on the lows, a tap into here, right? So that's our lower high. It's not a lower low at the moment. And yeah, see essentially what we would get. So we ended up getting a lower low. And again, you guys who already know our market structure rules, and for anyone who's new, it's essentially just 3 candles in the opposing direction that form and break and close above each other. That's how I map out market structure. So this became my lower low, lower high, and then this is my new lower high. So that's my new structural point. And then price came into here. So once price comes into here, I'm looking for my entry model because we've just completed phase two. Phase 2 was this price action in here. Phase 2 was this, right? This here is our pullback, right? Essentially, this in here is the pullback phase. So this pullback phase in here, essentially change of character, is our impulse. Then we have our pullback, and then we're just looking for the break of this high, right? We're looking for a change of character. A change of character, what's that going to indicate to us? That's going to indicate, I don't just want to take the position on this level. I want to confirm it. I want the confirmation. So with the lower time frame, I wait for the shift. And just like the shift down here told me that it was time for the pullback, right? Or the correction. Now the shift in the opposite direction realigns me with the 15 minutes. So if you just look at it as structure, right? We get lower low, higher high, higher low, higher high. That's all we're doing. We're just trading the structural footprint, but adding a couple of different things like supply and demand, a little bit of liquidity, lower time frame stuff. And so it's very, very simple stuff. And then essentially from there, it's just a case of like, do we end up getting a change of character? So we had aggressive move out, right? And if we look at this, we can see what we had a supply zone. That supply zone was reacted to. We had a reaction from that supply zone. And right now, we've just broken and closed above. That is our change of character. So when we have this change of character, phase 2 is already completed the moment that we pull back into this level. Now we're looking for our entry model. Our entry model has completed itself. We've seen the shift from lower lows to higher highs. That shift, that change in market structure tells us that we're about to go and run these highs up in here. And we're down here. And that is our edge. Our edge is the discrepancy between understanding where we are right now and where we are heading to with a probabilistic accuracy. And so that's it. And then from an entry perspective, I just want to understand where is the demand. So we see price pushed in, we collected supply, we had a reaction, and then demand kicked back in, took out the highs. And so I just want to use this entire range like so. And I need a minimum of a 1 to 5. So I just need to make this position a 1 to 5. So I'm going to put my entry on here, right? Essentially in the area of the demand. And I'm going to bring my target is obviously the 15-minute high. That's all I care about. I believe there is a high probability, well, I know there is a high probability that this high gets run. And so I want to get involved in that. We've had our impulse, correction, and now we're going into phase 4, phase 3, which is our impulse. We're expecting the continuation of price. And that is where we're getting involved. And so I need to make this a 1 to 5. So at the moment, it's a 1 to 4. I need to tighten my stop loss a little bit just to make it up to a 1 to 5, right? 1 to 4.98, 1 to 5. And yeah, that is essentially the trade idea. Price tags me in. Now, honestly, it did come pretty tight to my area of my stop. Thought I was going to get stopped out. And then price had this aggressive move to the upside. That gave me a little bit more confidence. And then the moment that we shift these highs, I move to break even. Now I have no risk on that position, and it's just a case of waiting for price to run to those highs. If you guys want a full, in-depth, free course on market structure, you can check the link in the bio below. Completely free, no strings attached. And that, guys, is impulse, contraction, impulse. Right? Impulse, contraction, impulse. That is the exact trading model that I rinse and repeat time and time again.